like to welcome everybody out to our commission meeting on this September 20th, 2023. If you'll all please stand and repeat the pledge.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. We'll go ahead and jump right into our commission meeting agenda. Item number 1 on the agenda is approval of minutes. Commissioners, it looks like we have one set of minutes from the September 6th meeting. Do we have any corrections or changes?
I've noticed, Lori, on item 7, it's noted the Inland Port Authority, but we probably should put Utah in front of that, Utah Inland Port Authority. And it's also down on the last paragraph of item 7 as well. That's all I have.
We have one correction. Any other corrections?
I didn't see any other corrections. I'll make a motion that we approve the minutes from the date here, September 6th commission meeting.
I'll second that.
We have a motion and a second. All in favor?
Aye.
Aye. Item number 2, if you didn't actually show up in person, you're missing out. We have a lot of royalty with us tonight. Item number 2 is Miss Carbon County introduction of the new royalty. We want to welcome you here, and please come to the mic and state your names for the record and help us understand a little bit about who you are and what you plan to do this year.
Hi, Commissioners. Thank you for having us today. I'm Kylie House, the director of the Miss Carbon County organization. Our organization is a scholarship and service-based program. The organization exists to provide personal and professional opportunities for young women to promote their voices and talents in their community. Our organization focuses on service, scholarships, being a role model, morals and values, goal setting, and becoming your best self. Our goal is to provide positive opportunities for the young women of our community to help them build life skills, improve self-confidence, and learn the value of service. Today, we would like to have each of our new royalty members introduce themselves and talk a little bit about their plans for their year of service.
My name is Carbon County, and I am Perry Mitchell, and I'm excited to go to the community and go on the floats and parades.
Hi, my name is Peyton Morelli, and I am Little Miss Carbon County, and I am excited to serve this wonderful community.
I'm Linnea Peacock, Junior Miss Carbon County, and I'd like to do my one day of service. It is called Carbon Cleanup, and I created this project because I really love our county, and I love hiking in the mountains, horseback riding, and going all over the county, or even just going on a walk. But sometimes I see garbage on the ground, so I would like to have residents from each of the main cities of our county nominate a street or small area, and I will have volunteers through social media, church groups, and friends and family. And I will have them help me clean up the nominated areas, and I'd like to promote the message of leaving any area you find better than you found it.
Hi, I'm Tatum Tatton. I'm Miss Teen Carbon County. My platform is called Be Fierce, Self-Defense Awareness. I focus on teaching kids and teens how to be confident in who they are and how to defend themselves in dangerous situations. I plan to go to the Boys and Girls Club and teach them self-defense moves and how to be confident in walking down the street or saying hi to a stranger or just a friend, And I also plan on working with Fierce MMA, and I also want to go to the schools and teach them self-defense classes. And I also am currently working on going to studios in our area because I'm a dancer and teaching the girls there how to defend themselves.
Hi, I'm Skylin Basso. I'm Miss Carbon County. My platform is called Safe Steps, Safe Kids, and it focuses on teaching the youth of our community what to do in emergency situations and how to administer basic first aid. I picked my platform because I've been in multiple situations where I look around and all I see is panic and confusion in everybody's faces, and I want to do my best to alleviate this. I plan on going to elementary schools and bringing certified professionals with me to help me teach these to the youth of our community.
Thank you, ladies. We're so excited for this upcoming year, and we can't wait to see what you do with this opportunity. So also at this time, we'd also like to request the allotted scholarship funds for the pageants that would be held in August of 2024 that will be awarded to our royalty crowned in 2024. In the past, the commissioners have set aside a $1,500 scholarship for the Miss Carbon County royalty and $400 for the Miss Teen royalty, for a total of $1,900 donated to the Miss Carbon County organization. We would greatly appreciate the continued support towards the education of the young women in our community.
Well, congratulations to all of you. It's exciting to see how much of a bright future we have in Carbon County with the amazing young people that we have in our community.
Yeah, no, it's appreciate Kylie. She invites me every year to come in and kind of do a little judging, if you will. I know that sounds bad, but and it's good to meet a lot of these young ladies, and you do a great job with that. So thank you for being a part of it.
Thank you.
You young ladies did a good job tonight talking at the microphone, so well done. Great representation of Carbon County, so thank you.
Yeah, great jobs, and you're beautiful young women. Thank you for representing Carbon County through this next year.
Perfect. We'll take your request into our budget period. It's not on here as a item to vote on, but it's in our minds now.
Okay.
So thank you.
Awesome. Thank you so much for having us. And if you have anything that the girls need to be involved in the community, let us know. Thank you so much.
You guys do a great job. Thanks.
Thank you.
Item number 3 on the agenda is review and possible approval of a memorandum of understanding with the Utah Office of Tourism 2023 co-op grants. Tina.
Hi, Commissioners. So in front of you, you have 3 different memorandums. This year, the Tourism Office applied for 3 co-op grants through the Office of Tourism, and I will just go over what we were granted. So they have a traditional co-op. The total project that I submitted was $125,000. We were asking the state for $67,500. This is a 1-to-1 matching grant, and we were granted $50,000 of that request. Next year, we are growing our stewardship, preservation, and exploration event, which is our geocaching event, and we're doing a cash in, trash out event, which will include a stewardship project that'll take place within the county. Our ask, total project was $15,000. Our ask was $7,500, and we were fully granted $7,500. Utah's next year, we're doing a new event. Next year is the 100th anniversary of film in Utah. So the Utah Film Commission has reached out to all of the tourism DMOs and entities to see how we can collaborate and work together to celebrate in our own communities. And so I've reached out to Mayor Peterman, who in turn involved the committee for the Helper Arts Festival. And in conjunction with the Arts Festival next year, we are going to be having a Utah 100th anniversary film gala at the Rio Theater. That will involve and highlight community filmmakers. That total project was $10,000. Our ask, of course, was $5,000, and we were granted $4,000. 75% of the funding is paid after the agreements are signed and when our office sends an invoice. The remaining 25% is paid upon approval of the final reports.
Perfect. Any questions?
No questions from my part.
No questions.
I'll make the motion that we approve the memorandum of understanding with Utah Office of Tourism for the 2023 co-op grants.
I'll second that.
We have a motion and a second. All in favor?
Aye.
Aye. Motion is approved. Thank you for all the hard work you've done in submitting all of those and getting all those put together. So thank you.
You bet.
Item number 4, review and possible approval of agreement with Buskin Productions to shoot the 2023 tourism video.
Yes, so this project is a part of the traditional co-op. So thank you for approving that. So now we can talk about this. So I've been collaborating with local videographer Buskin Productions and talking to him about our goals for marketing next year and how we want to tell the story of the people that live in Carbon County. I think by telling the story of the people that live and work here, kind of creates a personal connection with our visitor in that this just isn't a place to come to. This is a place that we want you to come to, respect, interact with our locals, learn from them. And I think once you put a face to a place, some people tend to respect the area a little bit more. And so with us trying to grow tourism to be sustainable, we felt this was very important. So Buskin is just an amazing videographer. We've worked with him in the past, and this is going to take a little bit longer because we're going to shoot over a couple of seasons. And so we're going to get some footage even in the winter. So we're looking at possibly a 5 to 6 month project. The total cost for that is $6,000. And of course, that would be included in our traditional co-op where we were awarded $50,000. So half would come from the state and half would come from our office.
Perfect.
That's great.
Questions? Comments?
Nope, no questions.
Kind of a side note too, this isn't the only thing going on down here too. You kind of mentioned earlier today about PBS was going to come in and do some highlights and help her in the mining history. And so it's good, again, to put a face on this community. So
I think so too.
I appreciate what you're doing there. And I would make a motion that we approve the agreement with Buskin Productions to shoot the 2023 tourism video.
I'll second.
We have a motion and a second. All in favor?
Aye.
Aye.
Thank you, commissioners.
Item number 5, consideration of possible approval of a request for marketing, PR campaign, and media buys, qualifications, RFQ, for the Carbon County Office of Tourism.
Yes, so just so you guys are aware, and the county is aware, our contract with our current ad agency, Hub Collective, is expiring in December. So the Office of Tourism, Tina got together with some of her colleagues and she created an RFQ that we would like to send out in November, inviting people to apply to be our new ad agency. So there's kind of 2 parts to this. I just want to read you this. We're looking for vendors to guide and implement a creative, precise marketing and PR strategy and oversee associated media buying and manage social media sites. So as responses come in, one thing that we emphasize is they can respond to all of it or the creative portion of it or the media portion of it. I've had legal review it. We're good to go. So we're just asking for your permission to send this out in November.
No questions.
Yeah, I don't have any questions either. The Hub group has been really good to help us, not only with the county, but out in the rec department and some of the things that we're trying to promote there. So I think they've done a great job, and hopefully we can get them or somebody of that caliber to
I
keep
believe
supporting us.
they plan to respond. So yes, but like everything, prices are increasing. Things are becoming more expensive. So we're at a point where we want to, send this out for other people to respond to, other agencies. Okay.
I'll make the motion that we approve the request for marketing, PR campaign, and media buys, qualifications with an RFQ for Carbon County Office of Tourism.
And I'll second.
We have a motion and a second. All in favor?
Aye.
Aye. Motion passes. Thank you.
Thank you.
Jenny.
Item number 6, consideration of possible approval of a crisis nursery agreement with the Family Support Center of Utah. Shelley.
Commissioners, how are you?
Good.
How are you?
I'm good. So the Family Support Centers of Utah, they're a nonprofit organization, and they also hold a contract with the Department of Health and Human Services. And the funds are processed through the association and given to each family support center across the state. And our portion is $101,360. And this funding supports what we're already doing in our crisis nursery and what we're already doing in our parenting classes. So it's just an additional ongoing money that we've received from the legislature, and it's ongoing. So hopefully it'll just eventually start increasing in the next year, 2 years, but so it just supports my current contract with the state, and so yeah.
Keeps things moving forward as normal.
Keeps things moving forward, yes.
Perfect.
I have no questions.
I'll go ahead and make a motion that we approve the crisis nursery agreement with the Family Support Centers of Utah.
I'll second.
We have a motion and a second. All in favor?
Aye.
Aye. Motion passes. Item number 7, consideration of possible approval of a new board member to the Carbon County Board's Friend of Carbon and Emery County Children's Justice Center and the Tourism Tax Advisory Board. Shelley.
Yes. So Carrie Alton is the applicant for the another position on the Friends Board. And Carrie Alton served on our board for many years, probably since 2003 or 4, and then resigned and then came back. And so she's very familiar with what the Friends it's about and how they support our organization.
Perfect. We have one more applicant in here, Amanda Anderson. Oh, sorry.
Yeah, that would be for the
Oh, that's
tax
for
advisor.
that's for the Tax Advisory Board. Sorry.
Oh, you're fine.
Okay.
I'll make a motion that we approve Carrie Alton to serve as a member of the Carbon County Board's Friends of Carbon County and Emery County Children's Justice Center.
I'll second.
We have a motion and a second. All in favor?
Aye.
Aye. Which
And then-
leads us to the second part of that.
That's okay, because I'm not on the other one. I'm not part of the other board.
Yeah, you're good.
But I do have the signature page for the other item that was on the agenda. Can I bring it up? and have you sign?
Yes.
Thank you.
Thank you.
Thank you, Shelley.
The other board application is for the Tourism and Tax Advisory Board. This is the board that receives the transient room tax and the restaurant tax, and they give recommendations to the commission on how to spend that for matching dollars. Some of the matching dollars for the co-op marketing grants and different things. The production that Buskin will do, some of that money will go towards that. It also goes into some of our infrastructure and our rec center to provide money to support those as well. So that's the board that this application is meant to go towards. I guess I should mention as well, that the board has to be primarily, or the majority of the board has to come from industry, so either a restaurant or a hotelier. We had one of our restaurant operators that changed jobs, and so she's no longer qualified to serve on the board, so this is to replace somebody from the industry.
I'll go ahead and make a motion then, if there's no other questions, to approve Amanda Amy Anderson for the Tourism Tax Advisory Board.
I second that.
We have a motion and a second. All in favor?
Aye.
Aye. Item number 8, consideration and possible approval of a general services agreement with Kevin Ewell. Who wants to explain this one? Do you want me to? Go ahead. As a part of some of the work that we're doing with the assessor's office, we have we're looking at entering into an agreement with Kevin Ewell to come down and help provide some training and also some overview of some processes in the assessor's office to help in that office. Is that enough explanation for this individual? Will be answering to or responsible to answer to the commission, and not the assessor. The commission is hiring this individual.
Yeah, I don't have any more to add today.
Yeah, nor do I. I will make a motion that we approve the general service agreement with Kevin Ewell.
I second.
We have a motion and a second. All in favor?
Aye.
Aye. And then item number 9, presentation of the 2022 Independent Auditors Report. Seth, do you want to introduce this one?
Yeah, I was just gonna have John come to the mic, but yeah, we'll just have John take it. He's from Larson and Company. There are independent auditors, outside auditors, and they do our independent audit and provides our financial statements. So we appreciate him being here and taking a minute to chat with us. So thank you.
Well, thanks for letting me crash your meeting. I promise I'm not as pretty as the princesses. Probably not as entertaining either. All right. So I'm going to start with the bound together document. So this is the actual audit of the financial statements. I'll discuss our opinions, the different types of opinions we give and what they are, and the different reports that we're required to issue. I'm not going to spend a lot of time on financial data because this is for fiscal year 2022. So I'm sure that Seth's updated you since then on financial data. If not, then he's going to have a discussion with me. There is one thing before I get started. Our goal is to have these done, obviously, by the end of June when they're due. So I'm going to ask the commission group to reach out to the component units. So there's a couple component units that roll up into your financial statements, and they're typically late. And so we have to wait for them. And so we really can't, I mean, we can start the financial statements, but there are statements in here that are directly related to them as well as through the notes. And so we really have to wait for that information to be able to get that. So anyway, if you can help us on that end, we try to push with their auditors to get their auditors. And I blame the CPAs for this because a lot of the CPAs in the state of Utah, they do tax season and then they do government audits in the summer. And so all of the year ends are used to having 5 months to close their books and get done because their auditors are not coming until May, sometimes even June. And by June 30th, they're due. And it's really hard to have that quick of a turnaround, especially for a county. And so we've been trying to work with the state to get the component units to actually be due in May rather than June, which gives us a month. But then also us coming and do field work. I think this year we came in March or April. Yeah. So if we can get, that way Seth and his team can get the books closed over a couple of months rather than waiting for 5 months. It's just, it helps out a lot on that end. So just that request. All right. So the first couple paragraphs, that's our opinion paragraph. We've audited the financial statements as of December 31st, 2022. And our opinion is an unmodified or an unqualified opinion. Those are clean opinions. The basis for our opinions, we have certain guidance and guidelines that we have to follow as auditors. In fact, we're currently going through our audit. So our firm gets audited by other CPA firms. We have a firm out of Florida that's now going through our engagements, making sure that we're doing everything the right way. Those standards are both government auditing standards as well as generally accepted auditing standards, and there are differences between those two. So we don't do near the procedures on a for-profit or a not-for-profit that we do on a government. There's different procedures that we are required to perform. The second paragraph under that just says that our responsibility is to express an opinion on these financial statements. The two component units that I discussed, they are audited by other auditors, and so we rely on those audits as far as our scope is concerned in your financial statements. Your responsibility for the audit and the financial statements is knowing and understanding the accounting principles, making sure that the numbers are being done correctly and within the county, that the financial statements are prepared correctly. And then that second paragraph, I'm sorry if I'm repetitive. I know that you guys have been meetings that I've already done this with, so you're going to get a double dose, but it's good repetition. So this is something new, and this kind of came about with COVID, but you are required to look for and identify conditions or events that would prohibit the county from continuing as a going concern, at least in the next 12 months. So, like I said, this came about really because of COVID. What happened was there were a lot of downfalls in businesses, and when COVID hit in the spring of 2020, they were undergoing their audit. They issued audited statements, and there was no discussion of COVID. There was no discussion of, hey, there's this pandemic that's happening, and this is how it's affecting our business. Well, people rely on your financial statements. You're going to send these to creditors or to lenders, to the banks, to the state, and you can potentially go get grants. You can go get, funding based on your financial statements. And if they're relying on that data, and then all of a sudden within 12 months you fold up, then they relied on information that really was inaccurate. And so now, as a result, our standards changed, and as well as the standards for you guys as being the auditee of recognizing and then disclosing in the financial statements potential events that could negatively affect the county. Luckily, in the state of Utah, we were very well protected as far as the governments go. There were a lot of businesses that went out, but outside of the state of Utah, a lot of governments were hit a lot harder than we were in the state of Utah. We audit the American Samoa territory, and they completely shut their borders down. And so that was a major discussion or disclosure in their financial statements because they could not import and export for over 2 years. And so that financially affected the territory. So anyway, nothing of that this year, but just be aware that if there's things that come up, another COVID scare, whatever, and they're going to start shutdowns, I'm not predicting anything. I'm hoping it doesn't happen, but just be aware of situations like that. Our responsibilities for the financial statements, we have to be professionally skeptical, and we have to use our auditor judgment. We have to identify the risk of material misstatements, and we'll talk a little bit about significant risks in a bit. We have to look at your internal controls, not to give an opinion, but we have to A, make sure that you have controls in place, and B, that they're functioning. You can implement all the controls you want, but if you're not going to follow them, they don't do you any good. And then we look at how management applies the accounting principles and make sure that they're doing it correctly. And then also that last bullet point on the second page is we also, as auditors, have to look for conditions or events that would prohibit you from continuing as a going concern. Required supplementary information. There are sections in the financial statements that do not fall under the opinion. Those are the management's discussion analysis, which always follows the audit report. And then right after the notes to the financial statements, there's a section called required supplementary information, and that contains budget schedules and the URS pension information. So those two sections are not considered part of the basic financial statements. However, the governing board, GASB, requires that they always accompany the financial statements. So just different sections and what falls under the opinion and what does not. Supplementary information. So there's certain documents that are included in the financial statements, whether an outside party is requiring it or you internally would like to see that information in the financial statements. That is all rolled up and falls under the financial statement opinion. One of those things is your single audit, so that's considered supplementary information, but the federal government requires it to be attached to the financial statements, or the financial statements have to accompany it if you file a separate report. All right, so we're going to flip to the back of that bound copy. We're going to go to page 64. So this, I'm not going to spend a lot of time on this report. This is a report that we're required to issue just stating that your audit's been performed in accordance with government auditing standards, and part of those standards are that we look at your internal controls. And like I said before, we don't give an opinion, but what we are looking for are control deficiencies or significant deficiencies or material weaknesses that are causing material misstatements in the financial statements. So if there's errors in the financial statements of a material nature, what's causing that? Was it just a general mistake that, you know, got overlooked, or is there something in a process that's not working that's causing that? There wasn't anything major that we are required to report on that, so we're going to skip that one for now. Next page, page 65, is the report we're required to issue for the state auditor. We do give an opinion on your compliance with state compliance. The areas that we were required to look at this year are outlined in the center of that report: the budgetary compliance, fund balance, justice courts, restricted taxes, fraud risk assessment, and then government fees. And in the last paragraph of that page, you can see that our opinion is that the county complied in all material respects with the compliance requirements referred to above. So this is kind of a limited opinion, and it's very specific to those areas. It's not a general, you're following all of state code. However, we do build other code sections into our audit because I think that there's things in the code that's more relevant to what we do as auditors than what the state auditor has us look at. So one of those things is we look and make sure that all the money that you are reporting is getting to the county, going through the books, and then actually making it to the bank, within the 3 days. So that's just an example of the things that we're not required to test for the state, but we build that into our engagements. All right, the next report on page 67 is the report we're required to issue for the federal government. So because your county spent more than $750,000 in federal money, you're required to have a single audit. I'm not going to spend a lot of time on this report because it mimics the audit report very closely. A lot of the language is the same, but our opinion is that the county complied in all material respects with federal compliance. So also an unmodified or an unqualified opinion. All right, and then we'll skip that. And if you have any questions on the financial statements or anything else, always feel free to reach out to me. I'm happy to chat. All right, if you want to go to the stapled together copy. So this one does not go anywhere except for stays here, unless there's findings that need to be reported to the state. So this is communication directly to you as a commission group on things that we are required to communicate at the end of our audit. The first couple sections are responsibility in relation to the financial statement audit, as well as the plan, scope, and timing of the audit. That information is all laid out in the engagement letter. That's why we have you sign an engagement letter. Compliance with ethical requirements. So there's certain independence requirements and ethics requirements that we have as CPAs, and that responsibility lies with me as the partner to make sure that not only is my team independent, but we are also independent as a firm. And then there's certain things that will be threats to that independence. For example, if we draft your financial statements, that's a threat to our independence. So we have to do internal things to overcome those threats. So that responsibility doesn't lie on with you as a county, that lies with me. All right, significant risks. So I said we would talk about significant risks, and we're now required under new standards to tell you or communicate to you what the significant risks were that we identified as part of our engagement. And those were improper revenue recognition, cash disbursements, and management bias, financial statement estimates, and the ability of management to override controls. So just kind of a caveat on these, this is nothing that the county did in and of itself to warrant these three risks. All of our audits are risk-based audits. So every line item in your financial statements gets assigned a risk. So we go through every area. So we start with cash, it gets assigned a risk. We look at capital assets, we look at accounts receivable, we look at revenue, expenditures. So we assign a risk to each significant audit area. Some risk is higher, some risk is lower. So for example, capital assets typically in an audit engagement has a lower risk because it's very hard to pick up this building and misappropriate it. You can't lose this building, right? And it's very easy to determine the value because it's based on historical costs. So it's being reported correctly in the financial statements, and it's easy to figure that out, and it's here, right? We can actually physically see it. Whereas cash typically has a significantly higher risk just inherently because it's easy to misappropriate and it's easy to manipulate in the system. So what we do is we perform additional testing on high-risk areas, extended procedures, in order to get to the same comfort level that we would for something that's maybe a little bit less risk. And then we have overall risk for the engagement, and those are the three that are identified here. And just kind of a word of background, improper revenue recognition, this is an accounting or an auditing standard. Doesn't matter what type of entity you are, you have to recognize improper revenue recognition as a significant risk. And this really came about with the fall of Enron and Arthur Andersen. If you remember, Enron was manipulating revenue to increase shareholder wealth, and the auditors didn't catch it, and that caused both of their downfalls. So now our standards change that say we have to recognize that as a significant risk. Cash disbursements, you're a public entity, you're dealing with public funds, and they are concerned and want to know how you're spending the money. You get federal grants, and there are certain stipulations with those federal grants on how you can spend that money. And then management's bias, financial statement estimates, or the ability to override controls. So what this describes is when you're preparing the financial statements, you can build bias into the language of your financial statements. So something that may be a little bit controversial or maybe not may paint the county in not a great light, you can word it in such a way to where it is in your favor. So that may mislead users of the financial statements to think that it's, you know, all wine and roses when maybe it really isn't. And so we look at those things when we're looking at the notes to make sure that there's not bias built into that. Financial estimates, over time estimates can change, and you can actually manipulate those estimates as well. And then the ability to override control. So Seth, as the clerk auditor, has the ability to create journal entries. All of your financial statement system is built on transactions. So as you assess property tax, that's a transaction that's going to happen in the system. A certain individual is going to get assessed the tax. They're going to get a bill. So you're going to record a receivable and a revenue in the system. When they come to pay for that, you're going to increase the cash and decrease the accounts receivable. Those are transactions that build your entire financial statement system. But if there's an error that happens, or if you need to move money from one place to another place, or at the end of the year, you're closing your books, then you create journal entries. So journal entries are not transactions themselves. That's an override of the transaction control. So Seth has that ability to create those journal entries, but the inherent problem with that is with that authority, you can also use them to manipulate the system or to do things in the system that you should not be doing. So with all of these risks, what this means to us is we have to perform specific tests outside of auditing the financial statements. We have specific tests that address each of these situations and make sure that there's not material misstatements in the financial statements being caused by these. For example, with journal entries, we look at every journal entry that's created in the system directly from the system. So we're not just getting a report from somebody that can go erase some journal entries. We directly get them out of the system and make sure that we understand what they're doing, that there's been a proper approval process, and the controls are being followed. So long story short, this really isn't a reflection of the county that there's something incorrect being done. It's just, this is how we perform audits. So, all right. We talked about looking at the accounting policies and the accounting practices, significant estimates. Just remember that there's estimates in the financial statements, and some of them you have control over, some of them you don't. And our job as auditors to make sure that those are consistent as possible over time so that you're looking at good financial data. It's really hard as a commission group or, you know, assess management team to make financial statements for the future if you look over the last 4 or 5 years and you have these huge swings of data being caused by, you know, changes in revenue or expenditures, whatever it is, being caused by estimates. And so you want to make sure that your estimates are as consistent as possible. There weren't any significant difficulties encountered during the audit. And I just really need to give a shout out to Seth and his team. They really are good to work with. There is one finding that we're going to discuss, but they worked really hard to get past that finding. So just kind of a precursor to what we're going to be talking about, but just love working with your team. And I had all good reports from the staff that worked on the job. Really like coming down and working with Seth and his team. There weren't any disagreements with management. There weren't any uncorrected misstatements, circumstances that affect the form and content of the audit report. That just means that we have to communicate if there is going to be an opinion other than an unmodified or an unqualified opinion. So if we qualify something or if we give an adverse opinion, we need to communicate to you what the cause of that is. That's what changes the audit report. Representations for management. So we get a representation letter signed by management, and it's kind of a full disclosure letter, really just so I can feel comfortable that you're signing a document that you've been forthcoming with any information that is pertinent to the audit that we should be made aware of or that we've requested. Let's see, I don't need to talk about the rest of that. So let's talk about the one finding and then just go over the correction of the prior year finding. So the one finding this year is, it was kind of the same as last year. And this really just has to do with your capital asset system in the financial software. So over the past couple of years, and this really is not the fault of your team. I believe when the auditors did it before, and in fact, when I talked to the auditors before, they said, well, we really didn't rely on any information from the county. We just got what the current year additions were, and we just rolled it in the financial statements. So there was not really any reconciliation to the county software, which I feel like is unfortunate. And so Seth and his team now, for the last couple of years, have been trying to correct that in the system so that when we get a report from the system, it matches what we have. And so when we first came down, there were still some very large differences in between what our fixed asset program said versus what the county software said. And so I think that was a significant part of the audit, was just having them go in and clean up, and we would send reports, and then they would send reports, and we would figure out the differences, and Seth would go through and figure out what the differences were. Yes, we still have this. No, we don't. And so it was kind of a long process to reconcile that. But because that was the situation when we got here, that's kind of what warranted the finding, just because the differences were significant. But by the end of the audit, I think both systems now agree. So I think that this has already been corrected, and I really don't expect this to be an issue in the future. All right, so prior year findings, we talked about the capital assets. Last year, there was a budgetary finding, deficit fund balance, as well as a cash management finding, and those are all state compliance findings. However, they were all addressed and corrected in the 2022 audit year, so therefore they were not repeat findings. So those have all been corrected and addressed and shouldn't be a problem going forward. So any questions?
I don't have any.
I don't have any questions either. Thank you for that review.
Thank you for the audit, and Seth and your team, thank you for all that you did to prepare and get through it. Do we need an acceptance of the audit, or I'll entertain a motion to accept the audit as presented?
I'll make a motion that we accept the audit, accept the 2022 independent auditors report.
I'll second.
We have a motion and a second. All in favor?
Aye.
Aye.
Motion to adjourn.
We are adjourned. Thank you.